Finance Terminology by Alex Merced. Who is Alex Merced? For over a decade, Alex has been an instructor for Greco Financial Training. Learn more about the courses at Greco at greco.com. Alex Merced has also created over 2,000 videos on YouTube concerning finance and economics, is a 3-time Libertarian Party candidate, and the Vice Chair of the Libertarian National Committee. Financing, finding the money for an expenditure and investment. When you finance something, you're just saying, I need to figure out where to get the money for this thing. Equity. One way to finance an investment is through equity, by selling ownership in the company that you're starting or in the house that you're buying, but by selling ownership. This is usually done by issuing stock in whatever you're selling. Another way to finance an expenditure is through debt, which is financing by borrowing the money. This could be done by just taking out a loan or by issuing bonds, which represent the debt of a company or a government. Securities. Assets that represent an investment in a common enterprise, things like bonds and stock. So when you buy stock, you're buying ownership in a company. When you buy a bond, you are lending money to that company, but they're both securities and they're both issued in order to help raise money or to finance investments. The primary market. When securities are created and issued to raise capital. So when a new stock is created and sold for the first time, when a new bond is created and sold for the very first time, these are known as primary market transactions. The secondary market, where issued securities trade among investors. This provides liquidity. So when someone buys a stock in the primary market, let's say new shares of Facebook that were originally issued at their IPO price of $38, when they sell to another investor for a price that is higher or lower, that is a secondary market transaction. Long. When someone says that they're long, they're either saying that they're buying something or that they're bullish on the value of the thing. So if I say I'm going to go long shares of ABC, it just means I'm going to go buy shares of ABC. But if someone asks me what I think of ABC stock and I say I'm long ABC stock, it means I think the value is going to go up. Short. This is a term that can be used for selling something you don't own or being bearish on the value. So if I say I'm going short ABC stock, it means that I'm going to borrow shares of ABC from another investor, sell them, hoping the price goes down so I can buy them back at a cheaper price. If I say I'm short ABC, it might also be me saying that I think the value is going to go down. An exchange. An exchange is a venue for trading securities, like the New York Stock Exchange or NASDAQ. Exchanges create sort of a central place for people to buy and sell securities, and this helps people find buyers and sellers so that we can liquidate their investments and get into them when they need to. An index, a measurement to measure the movement of securities prices and other trends. A couple examples are the S&P 500 and the Dow Jones Industrial Average. Most indexes are just taking the prices of groups of stocks to help measure the trend in a particular sector of the economy, of the market overall, and other indexes measure things like volatility of the market, but they're all there to help measure the direction of something that might not be otherwise easily measurable. An option. A contract where the buyer has the right to transact at a specified price until expiration. So when you buy an option, you'll have the right to buy or sell at a particular price referred to as a strike price until that option expires. But if you exercise your option, you'll be forcing whoever sold you that option to transact on the opposite side. A call option. The buyer of a call option has the right to buy 100 shares of a stock at a set price till expiration. You would want to buy a call option if you expected the price to rise, because if you can lock in today's price, that means tomorrow when the price is higher, you can buy at yesterday's price and sell it at the current higher price. A put. The buyer of a put contract has the right to sell 100 shares at a set price until expiration. So if you're the buyer of a put option, you're locking in a price to sell, which you would want if you think the price is going to go down, because then you can buy at the market and sell it at a much higher price using your put option. Futures and forwards. These are contracts where both parties, the buyer and the seller, are obligated to transact on a set date at a set price. These are typical for commodities. ABS, asset-backed securities, and MBS, mortgage-backed securities. These are securities that represent a claim to a portion of the monthly payments from a basket of loans. So if I were to buy a mortgage-backed security, what I would get is a portion of the money from many people's mortgage payments every month when they pay their mortgage. A credit default swap. This is a contract that pays the purchaser if a specified debt instrument defaults. It's like buying car insurance on your car. If you crash your car, you get paid. In this case, you're buying insurance on a bond. So if you buy a bond or some other debt instrument and it basically defaults, then the insurance company or whoever sold you the credit default swap will pay you a lump sum of money. A share buyback. When a company buys its own shares back, this increases the price of the remaining shares. Because there's less owners of the company because you're buying out existing shareholders, that means you're splitting all future profits among a smaller group of investors, making those shares more valuable. You're also providing liquidity to those who sold their shares as part of the buyback. Recapitalization. This is when a company is swapping out one type of capital for another, either issuing stock to pay off bonds or issuing bonds to buy back stock. There's a lot more to learn about finance. What I recommend is heading over to greco.com and enrolling in the Securities Industry Essentials course that'll teach you all the basic terminology, concepts, and ideas and products of the financial industry. And you'll get to hear me tell you some more jokes and more stories. Thank you guys very much for watching this video. Have a great day and enjoy.